Hello, today we are going to discuss about the second quarter earnings of IndusInd Bank. As you can see in the exhibit, the headline performance was muted because of the contingency provision, but the core performance was stable and strong. So what were the other highlights of the earnings? First and foremost, business growth was very encouraging, with deposits growing by over 19% and advances growing by over 32%, supported both by wholesale as well as retail. The CASA ratio, which is the low-cost deposit ratio, was stable at 44%, and there was a stability in the asset quality as well. There was a compression in net interest margin by close to 8 basis points sequentially. This was because while the yield on the total book went up by close to 12 basis points, the cost of funds also went up by close to 20 basis points. Now coming to the critical issue of IL&FS exposure. The bank has created a contingency provision of rupees 275 crore on account of its exposure to IL&FS and group companies. The other concern for the market was IndusInd's acquisition of IL&FS securities. The management has clarified that it is not going to onboard any additional liability because of this acquisition, which is pending regulatory approval at this stage. The key question for investors is what to do with the stock. The stock of IndusInd Bank has corrected by close to 19% in the past 2 months and now looks more reasonably valued at 3.2 times its core banking book of FY20. Now, most of the negatives are priced in, and in the near term, we are going to see the Bharat Financial acquisition being consummated, which will give the bank access to a much higher yielding asset book, and hence we recommend investors to accumulate the stock in this weak phase. Thank you for watching.